Finally, the market has moved. We have some action, and it's some really nice action to be quite honest. So let's get straight into the chart and talk about what we are looking at. Hello, I am Robert, and welcome back to my lazy trading series. We actually have some action going on over the last couple of days that needs to be talked about. We've had a pretty flat market, really, and that market has gone nowhere fast up until today. Finally, today we have something to talk about, a profit on the table. So we are looking at a particular position where we need to make the decision. Do we just cash out and be happy? Do we take a trailing stop and let it go where it wants? Or do we lower our current take profit? We have lots of choices here, so let's get into the details. Right now we're looking at the order on the screen in a live market. As we can see, it is hovering pretty well at almost $1, but not quite. We have a 94 pip profit. So my first instinct would be to set a trailing stop. Maybe at the 50 or 60 pip and let it follow. That works well. We've seen that work in the past. But I also have a take profit set well at advance right here. This green line. Now it is I don't want to say grotesque or out of place, but it's very exaggerated. The likelihood of us actually getting here within any amount of reasonable time compared to the position size of just $10 is not practical. But I put it here as a place just to see where it would look at, or what it would look like, I should say is better phraseology. So I'm going to go ahead and disable the take profit, but I'm going to put a trailing stop in its place. I want to be able to capture the market in a way that tries to get profit as much as possible, but still does try to protect some of what we have. So I'm going to put the take profit at roughly around the 73 to 75 cent range. So now that I've told it I want a trailing stop, let's actually place our trailing stop. Okay, 5 pips. Let's go about here. Right about there. Now let's submit our order. And we are done. We now have a nice little profit set up. If the market goes against us and goes upward, it's going to hit our trailing stop. We cash out, we walk away, we're good. If the market goes the way we want it to and continues to go downward, we'll make more money. Right now, it looks like the market is going downward, so this looks to be the best decision. So as we look at the current market, let's bring it back into perspective. The yellow line is the upper range we are looking at. We have this crazy order sitting way out here, just in case. And we see that the market has been pretty much not moving very often. We've got a few good swipes in here and there, but not really a lot of foot traffic in this market. In fact, the buyers and sellers have agreed to a pretty consistent upper level resistance area that has held for quite a while, going back into April. However, on the flip side, or the lower end, we can see that the bottom edge of this market range is quite a different story, where the buyers and sellers haven't really agreed where a fair market value is. We have a rough idea for the upper range, but the lower range is much more questionable. That could suggest that the price is going to drop further in the near future. Then again, it could equally suggest that the buyers and sellers may disagree again, and the buyers might drive price up in an aggressive approach. We just don't know, so it's simply best to not even try to figure it out. Take the profits when we get them, and it's all good. But that basically is really what the market looks like for this pair. We have quite a bit going on, and it looks quite generous. I suspect that given the number of hours left in this market, that we might actually get into the $1.10, maybe $1.20 range if this particular area gets respected. I'm not going to guarantee it, obviously, or say it's going to happen, but I think it could happen. If it doesn't, it doesn't matter, because we still have some profit that we're going to take off the table. Risk management is something I've talked about a lot on this channel through a wide range of contexts and different displays. But it really is the whole point. If you can manage your risk, even with just placing random trades, you can actually make money in the market. Now, your profits are going to be relative to the amount of money you're risking. So right now I have a $10 position, so basically a 10% profit sitting on the table right now. That's not bad. If you want to get technical, 9.6%. But that's still good, considering that normally I only look for a 0.2% profit, or roughly 20 pips. So this is quite good, quite simple, and really just where we want it to be. Let me know though, how do you trade this particular market? Or if you trade a different market, how is that working out for you? Share your thoughts. Let us grow together. If you like this content, please hit that like button, hit the notifications, leave me a comment, and let me know how you are doing in your trading. If you have any questions, please by all means ask them. Thank you for watching.